I'm Mona. For those of you who don't know me, I founded Enzyme back in 2016, which was the first decentralized on-chain asset management protocol. Today, I still contribute a lot to the Enzyme DAO, but I spend most of my time with Avantgarde Finance. We are one of the leaders in on-chain asset management, and we have a regulated on-chain funds business, but we also support DAO Treasury Management and DAO Treasury Advisory. It's a real pleasure to be back at DappCon today, so thanks for having me. Today I'm going to start my talk by giving you some hopefully new insights into where on-chain asset management is going from the trends that we're seeing. I'm then going to talk to you a little bit how Enzyme is evolving in order to better service and adapt to these needs. And hopefully, I'm going to finish off by talking to you a little bit about why certain projects are choosing to build on Enzyme. So if we look at the data, the on-chain data on Enzyme today, it's interesting to observe that more than 90% of assets under technology are being used for DeFi native on-chain management use cases. Now, I sort of say this is interesting because anyone who's familiar with Enzyme today might know that it's usually associated with traditional fund management. So the fact that we're seeing all of these kind of new and innovative new on-chain asset management use cases, I think is a really interesting observation. And I'll talk to those a little bit in a bit. The second interesting observation is that if you look at the top 2 vaults on Enzyme by assets received last quarter, or another way to say that is the fastest growing vaults on Enzyme in Q1, again, they're not funds. They're these kind of new DeFi native use cases which are emerging. So I thought it would be interesting to share a couple of case studies from our top 10 user base and show you how and why they're using Enzyme. The first one I'm sharing here is one of our top 10 users. And Nexus Mutual, I hope most of you are familiar with them. If not, they're a great DeFi insurance protocol. And the way that Nexus works is that it accepts ETH collateral as deposits from users. And on the other side of that collateral, it's selling cover to insure the DeFi space and actually more broadly the blockchain space. So it's a really critical piece of infrastructure in the space, and it keeps DeFi secure. Now, the interesting thing is that until last year, the ETH was sitting in the Nexus vault, not earning any interest or yield. And so the sort of decision that Nexus had to make was, do we build out and add to our smart contracts, which was a little bit of a distraction from growing their existing insurance business, to adapt it to have integrations that we need, the policies that we need to protect assets in a trustless way, and also monitor the assets on chain to make sure that the protocol is never becoming under-collateralized. It turns out, actually, that they heard about Enzyme, and together we were able to very quickly integrate Nexus and Enzyme such that Nexus didn't have to build anything in the end. All they needed to do was connect to Enzyme. And the way they did that was they created their own Enzyme vault, the Nexus vault, which was owned and controlled by the DAO. They configured and customized it in such a way that they could delegate execution to a third party in a trustless way, in a way that that third party couldn't misappropriate funds, couldn't interact with any DeFi integrations that were not pre-permissioned. So essentially setting smart contract enforced roles and permissions. They deposited assets into the vault from Enzyme and in return received back vault tokens. And a crucial bit of the infrastructure is that those vault tokens had an on-chain oracle, on-chain price, which tracked in real time the performance of the assets in the vault. So they incorporated the yield from staking and other activities. Now that's important because at all times, Nexus now knows what the assets are as a whole and can ensure as a protocol that the Nexus protocol isn't under-collateralized. So all of these benefits were extremely useful to Nexus and prevented a bunch of development work from them. It saved them a lot of time and money, and it was also enabled them to move very quickly. So the assets that Nexus have in Enzyme today, that number is slightly out of date, is $52 million, and and we're really excited about working with them. The second case study that I thought I would share is Swell Network. So for those of you who don't know Swell, Swell is a staking protocol. And Swell was looking to diversify staking away from some of the giants and into Swell in order to boost liquidity for their protocol. And when they approached us, the solution they wanted to do was create a super SWEF campaign. What that meant was creating a super SWEF vault owned and controlled by the Swell DAO, and creating it such that the vault was denominated in Lido staked ETH, which is the largest liquid staking token. So depositors of Lido staked ETH could deposit into the vault, and then they designed a rewards program for people who participated in there and stayed in there. And what the vault did is it used Enzyme's automation to, as soon as the Lido staked ETH was accepted, it was redeemed from Lido staked ETH, and then SWEF was minted within the Enzyme vault. So the result for them, again, zero dev work, were able to turn this around in a couple of days. They were also able to integrate this into their website through Enzyme's white label solution. And the end result was that they managed to grow their TVL by 22 million, with 639 new depositors, unique depositors, and that's an additional 6,000 ETH staked for them. The last case study I have is Diva staking, similar but slightly different use case. Similar because, again, trying to bootstrap market share, but different because, interestingly, Diva was not live as a protocol when they launched their Diva, when the Diva community decided to launch this vault. So the Diva community voted on creating an Enzyme vault. And the idea for this vault is that they wanted to attract and incentivize pre-launch support for Diva. So the idea, again, they have two vaults here on Enzyme. One is denominated in Lido staked ETH, and the other is denominated in ETH. And the idea is people could deposit into these vaults, and the longer they stayed, or if they stay till the end, they receive Diva rewards for their loyalty. And the idea is that when Diva goes live, again, there's a set of policies to control that the behaviors of what can be done with these assets will not be misappropriated or done, anything else will be done with them other than go into Diva. So the idea is as soon as Diva goes live, Enzyme will facilitate an integration into Diva. The DAO will vote to redeem from Lido staked ETH and into Diva. And because the aggregate amount of TVL in the Diva vaults is $52 million, that guarantees them a day one launch of 52 million before they're even live. And again, from this program, we've seen 636 unique depositors, which will result in 12,500 ETH staked when they go live. Another interesting characteristic of all these three projects is because Enzyme has APIs and white label, they can integrate all of these vaults into their interface with their own branding very quickly, very easily. And the APIs also make it really easy for them to calculate the rewards owed to each depositor, display them on the interface, and eventually distribute the rewards. So those are three interesting use cases that I thought I would share. Hopefully you found them interesting. And I think what's clear from these use cases is that Enzyme is starting to show itself as a versatile on-chain asset management infrastructure, which is really fostering diverse verticals built on top of its foundation. And it's able to do that because at the core level, the protocol has taken a very modular approach. And that modular approach makes it much easier to build and innovate on top of the protocol. So we've talked a little bit about what we've been seeing in the on-chain asset management, and I've shared a few case studies for how some DeFi native use cases are emerging on top of Enzyme. But now I want to talk to you a little bit about why projects are choosing to build on Enzyme. And there's two parts to this. There's the tech component, and there's the sort of businessy component. So here I have a diagram of, we did an exercise to try and break Enzyme's value add down into like really simple building blocks. And if you look at the first 5 horizontal lines in white, you can see like this is how we see the protocol in a very abstracted way. There's really 5 areas that we see time and time again where users find value in the protocol. The first is the concept of vaults and shares, the fact that you can deposit, receive shares, and manage in the vault while those shares have an on-chain value, and Oracle. The second is the pricing gateway, and by that I mean there's a method built into the protocol, and that method is used to value assets on-chain. The third is DeFi integrations. The way that we do DeFi integrations is at a smart contract level between Enzyme and the third-party protocol. So today we have dozens of integrations with various DeFi protocols and also some staking and governance protocols. The fourth is policies. Some people might relate to policies better when I say roles and permissions, but the idea of policies is really just codifying what vault managers can and can't do. So vault owners can do anything. So let's say a vault owner is a DAO, but if you assign management to a third party, you can control their roles and permissions in a smart contract enforceable way and very user-friendly way through the interface. And these can be things they're allowed to trade, not allowed to trade, protocols they're allowed to interact with or not. It can even be things, because we have this knowledge of price on-chain for the value of the assets in the fund, we can also deal with things like maximum slippage stop loss or even P&L stop loss. And the last is reporting. So because we run 7 subgraphs underpin the Enzyme protocol, we're collecting on-chain data in lots of different verticals, and then putting that data into a user-friendly API, which can easily be used for many other things. So that's the modular protocol, core protocol. And then what we've spent the last 12 to 18 months really focused on is the tooling around the protocol. The tooling, I'm going to go into a little bit on the next couple of slides, but really at a high level encompasses SDK, API, automation tools, the white label, which I briefly touched on, configurations, and customizability. Now, the combination of the core protocol plus the tooling lends itself to lots of verticals being built on top of Enzyme in the on-chain asset management space, and lots of front ends being built in a really easy, user-friendly way. So that's what we're hoping to see a lot more of in the coming months and years. And those verticals could be anything from active trading like funds, indexes, protocol and DAO asset management, liquid restaking products, structured products, fintech and crypto banking, etc. This is exactly the same slide, but I've just mapped out here my 3 case studies that I shared with you. And you can see, let's see if I can, you can see here, yeah, our Nexus Mutual is using reporting policies, integrations, and Priceway modules, as well as using reporting policies, integrations, and vaults, and Diva is using all 5 of the modules. So again, just to reiterate, this is all smart contract-based modules that they would have had to build from scratch, which would have set them back and cost up a lot of dev time and distracted from their main kind of value proposition. So some of the areas that have been growing and that we have been seeing some traction in on the asset management side are a regulated fund platform. So that is something Avantgarde Finance has been focused on. We became, as far as we know, last year, the first ever company to become regulated to launch on-chain funds on Enzyme in as light way as possible. And we're able to open up that infrastructure to third-party managers. So any fund manager that wants to come and launch their own fund can now do that on our platform without having to go through, I think it took us 18 months to get all the licenses. The second area which we've been focused on, we'd love to, we're very aware that we can't build this all ourselves. So we've been very focused on building through partnering as well. And this easy facilitation of indexes and AI agents is a great example of area where we've funded grants in the ecosystem to help further build out that functionality. So in terms of facilitating indexes, the key thing that we've been asked time and time again for is the possibility to rebalance portfolios automatically. We funded 31/3 to build that out for us through a grant. That's nearing completion. Hopefully we're going to launch that end of May or early June. And we also have become really interested in how AI agents can be useful in on-chain asset management. And so we recently partnered with Giza to fund their hackathon to build AI agents on top of Enzyme. So we're really, I think that's happening this week and next week, so we're really happy and excited to see the results from that. The third area that we're very focused on is DeFi automation strategies. So building automation tools around much more complicated DeFi native strategies. We've made huge progress in that, and we're starting to actually onboard a few projects in that respect. We've also started to explore RWAs and structured products a bit more, and we have, it's no secret that we're working with Sygnum Bank for a pilot since last year, and we funded a project called Gorilla Funds, which very excitingly built a direct bridge between Monarium and Enzyme. So through them, you can deposit into an Enzyme vault through Gorilla Funds from Monarium account. And in terms of why builders are choosing to use Enzyme, as I said earlier, the tools have developed a lot since we first set out. We have sophisticated SDKs, APIs. We have automation tools and libraries. We're also building out Python libraries now in addition to the ones that we already have. We've also built out a services team to support teams that want to build on Enzyme but maybe don't have all the right skill sets. And the white label is also very helpful to get people building faster. So those were the sort of more technical benefits. In terms of more kind of businessy benefits, the obvious one is it's a huge reduction in cost for a team to build on top of Enzyme. As anyone here probably knows, hundreds of thousands of dollars to launch a set of smart contract protocol and audit that and maintain it per year. So being able to plug into one that's existing is much easier. It also accelerates your time to market. All three of those examples that I shared were, it took about, from the time they made the decision, it took less than 2 days to actually launch them. The infrastructure is reliable and battle tested, which says a lot in this space. We've been on chain for more than 5 years. Enzyme can also help projects accelerate their TVL growth, as we saw with Diva and Swell. And we're also starting to explore more off-chain integrations as the space of RWAs really increases. So to summarize, the way we're seeing Enzyme today is a protocol that accelerates growth for asset managers and builders. And if any of you in the room are thinking about building anything or even want to contribute towards the tooling side of things or even the protocol, as I said, I would definitely encourage everyone to check out the grants section on enzyme.finance or reach out to me. I'll be here this week. So thank you very much. I don't know if anyone has any questions. I think we do have time if there are any. But yeah, thanks.